All right. Hey, everybody. Real Estate Ninja here. Hope you're doing well. We're going to talk about the repo window, the repo market. The Federal Reserve is dwindling down, winding down the amount of money that it has been giving the banks for liquidity purposes. And there's maybe a freak out. Actually, I believe there will be. And this story's out of Reuters. It's entitled "In the Market, Repo Market May Throw a Fit and Spur Fed Action." Let's do this. Hold on. We're a little sideways. It's just awkward. It says some of Wall Street executives feel a tantrum coming in the U.S. short-term financing markets, perhaps as soon as March. It could put pressure on the Federal Reserve to ease policy. A series of events are expected between March and May, some of which will reduce the amount of cash in the financial system, while others increase demand for liquidity, according to interviews with 4 banking executives. Let me stop there and say that right now, bank lending is already dwindling down. And when the Federal Reserve stops this action of providing this liquidity to banks, it's going to get even worse. And that's why I am of the position of waiting right now. The banks went through, I can't even say a mini crash. The mainstream media put it out to be a mini crash. Even the FDIC came out and said that they were insolvent at a certain point during the summer, that they could no longer insure banks. And to think, you know, I remember when I started these channels and I said, I'm gonna bring you through a collapse, what it's like. And I remember being so angry and so like, honestly, like sort of beside myself that nobody could figure out what was going on before Lehman Brothers crashed. When Bear Stearns went down, I was like, you've got to be kidding me. How do people have no clue? But the fact is, very few people in the country have an idea of how our financial system works. Even just, if it's just a broad overview, they have no idea because these secrets have been kept for so long, and it actually hasn't been since social media that they've really started to come out. So this May, you know, from March till May, I think we're going to really see what happens in the bond market. It's going to tell a lot. And banking execs coming out and getting upset, which obviously I'm going to be covering like crazy. And then we're going to see exactly what happens with mortgages. Now it says here, a Fed lending facility that was put in place after the regional banking crisis last year will expire on March 11th with $129 billion outstanding. That will remove what has become an attractive source of funding for banks, another market backstop called the standing repo facility that the Fed officials have held up as a safety net has seen only a few banks sign up so far. At the same time, the demand for cash is likely to increase with the issuance of massive quantities of U.S. government debt and quarterly tax payments due on March 15th. And annual payments due on April 15th. In addition, a move in May towards faster settlement of trades could increase demand for short-term funding, as firms that are not fully prepared to make the transaction would need more overnight financing. All this is happening as the Fed has been steadily draining cash from the financial system by offloading bonds from its balance sheet, unwinding its pandemic-era support to the economy. BNY Mellon strategists estimate the amount of cash parked overnight with the Fed by money market funds and others. Funds seen as excess liquidity could dip below 200 billion by May, a tenth of what it was in June last year. Some expect this facility, called overnight reverse repurchase agreements, could drain to zero by mid-year. Any stress is likely to show up in the short-term financing markets. Interest rates in repurchase agreements or repo, where investors borrow against Treasury and other collateral, spiked briefly at the end of November and December, while market participants initially attributed the increase to other factors. The bankers said liquidity has been coming into sharper focus. Liquidity could start to show some cracks as funding needs continue to grow, said James Tabachi, CEO of South Street Securities, an independent broker-dealer active in Treasury markets. He goes on to say it is a balancing act and it won't take a lot to cause a disruption in the funding markets. Now it says here also that sudden spikes in short-term financing markets, especially if they are sustained, could pose a threat to financial stability as it becomes harder and more expensive for firms that need the money the most to get it. This time around, for example, it could expose any lenders that have not managed to stabilize their deposits as after last year's banking crisis. The confluence of these factors also underscores how the risk of policy error is increasing as the Fed gets closer to its target inflation rate of 2%. The sad thing is that people don't realize is that the Fed is not going to come anywhere near its 2% target because the government is lying about the inflation numbers, okay? They're lying about the jobs numbers. They're deceiving you because they're not telling you the full truth, which is a lie. It's deceiving you. It's getting you to believe something that isn't fully true. Like, hey, we just came out with these great job numbers. Look at all these jobs. Well, they're not full-time jobs, they're part-time jobs. And oh, yeah, we get it. A lot of people are holding down 2 part-time jobs, but we're gonna count those as 2 jobs, which means those are not 2 jobs. If they're being held by one person, it's 1 job. End of story. But you see, they know that most Americans will just go down this road of believing everything is awesome. It's like the Lego movie. And, quite frankly, anyone that thinks that the Fed is in control of this is right now, we're in the moment where money is being printed to produce liquidity, to put a Band-Aid on a liquidity crisis. And because the interest rates aren't high enough, they have not squelched the two most important factors of inflation, and that is energy and food. Those 2 things are things that we can't live without, that we don't want to live without, energy and food. Yeah, we can live without extra new furniture from IKEA. That's collapsing right now. We just did a story about that, how IKEA's got to drop their price, and they're citing deflation. I'll give you an example. I had somebody, I don't have the exact quote, but someone said, I was completely wrong about inflation because inflation is a decrease, because I was talking about furniture was going through deflation, like IKEA said. It wasn't even my words, but I stand behind those words. Yes, that's true. If furniture is deflating in prices right now. This person says, I have no grip on inflation because inflation is an increase in the money supply, or the decrease in the purchasing power of the money supply. And it was funny because I had to text this person back and say, you're not that bright, because I wasn't talking about inflation at all, I was talking about deflation. And if we want to go with your definition, which is one part of the inflation definition from Webster's dictionary, then deflation is an increase in the purchasing supply because items are going down in price, which means it costs less money. People, most people have no concept of how deflation works, and they think that deflation works all at once. I was talking to someone in the mortgage industry the other day, and all they kept bringing up about 2008 was the ninja loans. And all I wanted to talk to the person about at first was, I want to talk to you about the loans that they were making to certain ethnic groups and how they were targeting people of lower credit scores. And I was trying to show that that's where we are in this cycle right now. Ninja loans are coming. If rates stay higher for longer, get ready. Negams are coming back. They're going to have a new name. I hate to tell you that, but everyone thinks that everyone learned from the lessons of the past. That never happens with human behavior, ever. If rates stay higher for longer and banks can't make loans, they will figure out a way, and the government will back them up. So the government's already backing them up. The government's already making it to where they're changing the definition of certain words. They're turning around and saying, hey, you know what? We're going to go ahead and, let's go ahead and do some government-backed loans for multifamily. Instead of 20 or 25% down, let's go ahead and let them put 5% down if they're going to be owner-occupied. The government's already doing it. So just so you know, this is what's crazy to me, and it just blows me away about the real estate market. Even people in the industry, it takes me a while to get them to stop talking enough to go, look, I don't want to focus on the extremes, because that's what humans do. They always focus on the extremes. But what you need to do is you need to focus not on the extremes up here and the great times and lows down here. You need to focus on where we are in between, because if you could see where we are in between, you could see how we're going to go to that extreme. So many people tell me, like, there's no way we're going back to ninja loans. Yeah, we are. As a matter of fact, here's a great example. Just a little while back, the government started allowing less documentation for business owners. So that's yet another example of how everything got tight in 2010 to 2000, let's say 18, but things are getting looser again. Why? Because the banks can't make loans. So we're going to revert back to where we were at those extremes if the Fed does not lower rates. And we know they can't lower rates because they haven't stomped inflation. They can lie all they want about the GDP and say it's great, even though it has nothing to do with us. It has to do with the money that we're spending on wars for other countries. Okay, they can lie all they want about factories being built, but they're not full-time jobs going into those factories because we care about another war going on between China and Taiwan. But the fact of the matter is, food is not going down. So you tell me, where do you think we're at? I don't think that we're headed anywhere good, unless, this is the thing though, you can't stop any of this crap from happening, but you can get ready for it. So I choose to get ready for it. And guess what? After everything's bad and people are losing their jobs, it's going to work out. The sun's going to come out tomorrow. This isn't the end of the world. Although there's a lot of people, there's some people on this channel who think this is the end of the world. We will know the season, and this ain't it. Hope you got something from this. Real Estate Ninja is out. Oh, and thanks to everyone that hit the subscribe button again, because YouTube doesn't like subscribers on these channels. I really appreciate it. Have a great day, guys.